So welcome back to a new video. Today I want to just kind of backtest and show you how I see my trades and see my entries and how I identify a good trade. And so we're just gonna get straight into that. Since the first thing I do is really simple. I go into monthly, yearly, yearly not that often. It's really unnecessary because most of the time it's not reaching that. I'm trading in like 15 minutes, so it's whatever. But I mark the monthly open, the weekly open, which is the same here. So I'm gonna make it a oops, this was the wrong one. Just gonna rename that. Open here. Daily open is here. And I already have important levels kind of. And now I just go into 1 hour and mark big consolidations. You can clearly see we have a big consolidation right there. Here we have a big consolidation right here. Oops. So you can mark out our volume POCs. I made a video about this. If you want to check it out, link is, it should be like right there. So you can click on it. I think this is also a good level. These ones. This are light level kind of. They're not as important as the ones above, but they can still be useful, you know, if it reaches that level. So I'm gonna mark it out, but I'm gonna make a text that it's just a light level or something. Low level or something. I don't really know. Like I just name it whatever. So I can see the difference between a good and a bad volume POC. But it's still like useful knowledge, you know. On the right side though. I want to quickly introduce my partner, my flash funding. I'm not just saying this because they're my partner. I really like this prop firm and I think it will be one of the biggest in the future. They have such a small profit target by just 6%, which is easily obtained by just two 1 to 3 risk reward trades. And if you want to get yourself an account, this is my code. Link is in the description. And let's go into the video. We click here, top, right. Okay. So we have our levels now. We see liquidity points that we can also mark out. So this is obviously a good liquidity. This is obviously a good liquidity. Can also make like liquidity and liquidity. I normally just do this with like a lot of pairs. So I don't trade only one pair. I like to trade multiple pairs. So I actually find a really good trade since it's basically the same every time. It's just that some pairs have more volume, so they move differently, but it's still gonna happen because the market is moved by kind of emotions. It's always the same, it's repeating itself. So it doesn't matter which pair you trade. Obviously, if there's no volume, the market condition will be different than a euro US dollar where there's a lot of volume. Still, you can trade any pair, basically. And yeah. So what I do now is we see that we just swept this liquidity right there. So it's probably gonna go for the daily open now, especially because we know that we had one impulsive move, we had a retracement, impulsive move, retracement, impulsive move, and normally the next retracement will be the last retracement, or not last retracement, but then it's gonna probably go for the big retracement here. So we go in lower time frames now, and we want to identify if that's actually a good sweep. It's not, in my opinion. It's just too consolidating. I don't think it's a good sweep. So we're gonna ignore that. I'm gonna go in 15 minutes and we're gonna see that it's kind of made a retracement already. So it's probably gonna retrace, react to something like an order block here, go for this liquidity again, and then we're gonna change trend and go for the daily open. So we're just gonna go forward. We're not trading this. As I said here, it's probably reacting to something. Here we have, as I said, like a lot of people would see this as a liquidity sweep. It's not right. You have to identify the high time frame, or you have to see the picture in the high time frame. Okay, it was bullish order flow. We had the retracement already. We have the impulsive move. Normally it always makes impulsive retracement, impulsive retracement, impulsive retracement, and then we have the last move. So this was it was clear for me that this sweep just wasn't right. The sweep wasn't like good as well, since we saw it kind of slowed down the here, had this like a thing here, but it's never really reacted here. So we didn't actually, the support and resistance traders didn't even enter. So it's not a valid sweep. So here they could have entered because they see a bounce. and people also see a liquidity sweep, so we have more liquidity right there. So it's probably gonna hunt for this. And now I would see it as a valid sweep. As you can see, big reactions. It's probably gonna retrace in lower time frames. You go here, we can actually mark our volume area here. We have it here with an order block matching. This is not my strat I normally trade, but this would also be a good trade. I would probably take it. Okay, this was news, unlucky I guess. But I would enter if there was no news. I would enter here, make my stop loss at the sweep with some breathing room, and we could aim for liquidity first, and then for the daily open as a TP, so first TP and second TP, with some breathing room here to the upside, so probably here at the order block. And yeah, first TP would have hit. And let's see, full TP would have hit. Well, you just have to understand the market, okay? You can make a lot of money in the market. You just have to look at the market more often and find similarities. Journal your trades, and then you will find stuff like this. A lot of people would have failed here and get trapped here, get swept out, and then would have been mad because they see, oh, now it hit my TP. But you have to understand that it's your fault. You're actually not finding similarities because you're not journaling your trades and you're not looking at your trades that you lost and find stuff that happens all the time. We see here, I want it to be bigger, right? We see here, impulsive move retracement. Consolidation, because it's probably gonna, it has a really impulsive move right now. And here we have a liquidity. And this one, the support resistance trader didn't even enter. Like, where would they enter here? They're not bouncing on the fucking support or the resistance area yet. So this is actually the bounce for them, because you can see the wick is above it, but it closed below it. So this isn't a sweep. This is also a trade for support resistance and for smart money concept, trapping a lot of people. Now it gets swept here. You have a consolidation, up, sweep, down completely. It's that easy. It's actually not hard to see. Okay? So I think I could do more examples, but I'm gonna do that in a different video. You can see that this was news, so it's obviously not as valid. It's still followed, and it's probably gonna retrace now, go to this low level, maybe go through this, retest this level, probably go down here into the volume area, big bounce away from it, goes down here, we can catch this trade here, go up here, and yeah. If I'm not right, let's see. It's making a new volume area right there, by the way. Maybe it makes impulsive move from that. Let's see. Okay, it goes down. Retracement, you could have catched this trade as well. Goes down to this volume area. The volume, okay, it's going through this, which is also valid. As you can see here, we went down, we went to this volume area, we didn't have impulsive move to the upside, so we didn't take this trade. It actually went through, makes impulsive side, move to the downside now. So it's probably going for this liquidity, since in even higher time frames, we are actually bearish. So we see consolidation, impulsive move, consolidation, impulsive move, consolidation, impulsive move. Like, you're seeing the structure of the market and you go with the flow. I thought it's probably gonna go up now because we see that we had a lot of bearish momentum here. So it's at some point it just has to slow down and go up. But it didn't react to my volume area. It didn't have impulsive move away from it. So I didn't take the trade. I don't lose the trade. Maybe I wasn't right at the end. I was right at the beginning here. And this is the only important part. You just react to the market doing stuff. So don't even care about this, okay? So this is the video. If you have any questions, just ask me in the comment section. I hope I can help you. And if you want to learn trading, I have a Discord server, link is in the description as well. I'm making giveaways there for funded accounts if you want to do that. I'm also online there every day, so you can ask me anything. Anyways, bye bye, see you next time.